You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Oh, yeah, there it is. There's the music. That means it's Volatility Views time, listeners. The time for the first Vol Views of 2019. Kicking off the premier program for volatility traders. My name is Mark Longo, coming at you live every Friday, noon Central, 1 p.m. Eastern, or of course, get us on wherever your finer podcasts are pervaded. We don't judge. Just download, stream, listen, enjoy, ask questions, and so on and so forth. Play along on our polls, make your guesses. A lot of you guys did for your end-of-year crystal ball prognostications. We'll get to those a little bit later. Still time. We were generous. We extended that one for you because a lot of people wanted to play after. Twitter only gives you like 7 days. So after the official poll ended, we extended it. So it'll go through the end of the day today. So if you haven't, excuse me, if you haven't played along yet, I know a lot of you did, but if you haven't played along yet, we gave you a couple of extra hours to do. We gave you extra week actually to do your math, do your homework. More than we did to do our analysis on the show last week. So you had a lot of time. No excuses. Get those prognostications in. Close for the year. If you also want to do the average one like someone suggested, you can do that as well. We won't hold it against you. Maybe bonus points if you get that one too. And you will win fabulous prizes to be determined, but all kinds of good stuff. We'll squeeze our partners and contributors and we'll do some stuff. It'll be fun. It'll be good. But you got to be within a point. Remember, it's not just willy-nilly. You can't be 5 handles away and be the closest and win. No, sir. You got to be within a point. And then you can get down to business. Speaking of getting down to business, let's do just that. Help me do just that for the first Vol Views of 2019, the greasy meatball himself, Mr. Mark Sebastian. Mark, we missed you on the end-of-year rundown, or wrap-up, I should say, last week. But now you're back. Happy New Year to you, sir.
Hey, good to see everybody. Happy New Year.
Are you seeing us? Did you plant spy cameras in all of our houses again?
I did. It's good to see and hear you, Mark.
How is this new year of volatility treating you? Kind of a lot like the old year.
Yeah. I mean, it's definitely been interesting. Today appears to be a bit of a real breakout and a kind of a real change from the previous few weeks.
Yeah, I agree. So let's get to it with a little bit of our old volatility review. The first one for 2019.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. If you're new to the show here for 2019, first off, where you been? It's been quite a while. We've been doing this show for a long time. Certainly the longest running, as far as I know, the only real game in town when it comes to some sort of weekly vol analysis out there in the options and derivatives world. But welcome. This, if you're new, you got a lot of archives to catch up on, so good luck with that. Lot to suck down there. But that said, this is, of course, a portion of the show where we break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity perspective. And as Meatball alluded to, we're in another weird one. You know, we've been in this topsy-turvy, tumultuous market. Will it sail off? Will it rally? Either way, it's moving, it's shaking, it's rocking, it's rolling. This week has kind of been a lot of tumult to the downside. We've seen a lot of the continued hand-wringing over the market shutdown, over tweets out of the administration, out over the trade war, et cetera, and so on and so forth. A lot of negative news, a lot of negative nannies, real Nancy's out there, really, or nannies, take your pick, really just weighing on the market. Today, not so much, kind of a combo. Weird. You saw a massive jobs report come out. Economy adding 312,000 jobs in December. That was way beyond what anybody expected. Although kind of a mixed bag. Unemployment up 3.9%. We also had Powell scheduled to speak today, and usually, if you saw the numbers for his every time he has a major speech or announcement, the market gets hammered. So the combo of a strong jobs report combined with Powell speaking, maybe that might have spooked everybody. The Fed's going to act regardless of or in spite of anything else. And yet, that's not what we're seeing. We're seeing kind of the exact opposite today. Massive with a capital M rally across the board. The S&P up 3.7%. Yes, I said that correctly, listeners. Almost the exact same percentage for the Dow. The NASDAQ leading the charge up 4.5%. It's like all of the earlier parts of the week were just a fever dream. And here we are now making up for lost time. Gold taking a little bit of a relaxation today, as you might imagine. Even crude getting a lift today, hovering around 48 out there in WTI. So crazy town. Mark, we're in weird territory. Usually where people are dicey about the Fed already. So a strong jobs number, you think would spook them, combined with everything else we got going on, the government shutdown not seeming like it's slowing down anytime soon. And yet, you know what? We're up, and we're up orders of magnitude. It's kind of crazy town, huh?
Yeah, nobody cares. Powell came out and seemed pretty dovish. He said, we're going to be data dependent, basically kind of confirmed there's not going to be a rate hike in the next quarter. Because, what we're seeing is really what a bifurcation of the two largest economies in the world. China is getting, is an utter bag of flaming poo in terms of an economy. Meanwhile, the U.S. economy is flying. And so, we get this idea that, hey, maybe we can, with a pause in rates, which makes some sense. There's no inflation. Oil's cheap. Any inflation we get out of, quote unquote, trade wars is allegedly transitory. And so, with him being dovish and really, we are, from a rate perspective, we're light years ahead of every other developed economy. That along with the other governors, it appears that the Fed's finally taken a cue from markets, because he mentioned we're taking this cue from markets that we need to slow our roll, and they're going to slow their roll a little bit. I think that the likelihood of 3 hikes next year is extremely low, and that is a big deal, and that is why we are seeing such a massive change in the S&P and the volatility landscape.
That's why you tune into Vol Views, baby, for that technical analysis, which was, and I quote, "The Chinese economy is an utter bag of flaming poo." That's good stuff. Words. That's good stuff. I like it. That's the quality analysis people have come to know and love us for here on Vol Views. But I'm still laughing over that one. But you're right. The Fed, everyone says, the Fed is this independent body and they're not guided by market forces administration, but they can only live in a vacuum for so long. They've seen the excessive amount of volatility that's in the marketplace right now. A lot of that on their watch as a result of some of their actions. A lot of it beyond their control, the administration, the trade war, things like that. But certainly they are adding to the maelstrom, adding to the cacophony that is volatility out there right now. So they can't be immune to that forever. They're getting pot shots from the administration all the time. They're getting tons of pot shots from Wall Street. You can only be, hit by those slings and arrows for so long before you probably make a realization that maybe you need to take your foot off the gas. And you're right. And if you look outside of the U.S. shores, things are crazy all over the world from a macroeconomic perspective. So here we are kind of pumping the brakes. And the rest of the world's like, hey, we'll take some of that action. Give us some of that lift. So yeah, it's we are in this very strange environment, and it's reflected in the vol space as we're seeing this huge move. Listeners, we're seeing VIX Cash taking a break off 3 handles. I won't say percent over percent. It's the new year. We can't start off by offending people, even though it is fun. Even though I'm with you that it's an absurd thing. I just like to say it now because it gets so many people so riled up, including the meatball. But I'll lay off the start of the new year. I'll be a nice guy. Right around, we come in the showtime, we were at 22 3/4. Now around a little bit over, down around 22 1/4 or so. So coming off a little bit even during the show. VVIX itself also off. And by the way, that's about 6 handles below where we were this time a week ago. VVIX itself also off about 14 handles, even though VIX itself is moving. One of those strange beasts we see out there in the vol space. The futures curve coming into showtime was weird. Right before showtime, it was eerily flat. Actually, you had the cash and the front couple of the futures almost equidistant from each other. It was front month was effectively unched to the cash, and we saw the second month only about 3/4 of a point of a discount to the cash. So that we've seen usually a very steep bid to the cash, and then the futures in the front portion getting all kinds of backward. This time they're still in contango, they're still backward. Don't get me wrong, but not quite as nutty as it was for a little while there. Mr. Meatball, anything catching your eye out there? VIX futures term structure land over this crazy tumultuous week, sir?
Yeah, VIX futures are super flat. We've seen the cash index actually falling back below the futures a couple of times. It's been throttling between flat and below the cash index or the front month futures. So we've been, had this weird situation where the VIX futures are still backward, but the cash has floated between flat and actually in a contango. Similarly, that entire VIX curve is flattening up, and that is something that's interesting. But I think the real story here is VVIX is threatening to break 80, and VIX options volatility is just. I think if you look at how much VIX has moved over the last couple of days, it is dirt cheap, and you got to wonder why nobody wants to own some of this VIX gamma. Maybe they don't understand it. I don't know, but I'm a little shocked that the option vol is this cheap.
Yeah, when I first saw that print for VVIX today, I actually had to refresh. I was like, wait a minute, maybe my browser is showing me a stale quote here, right? Because those two don't compute, right? We're moving and shaking all over the place, and yet VVIX annihilated since last week. What are we? It's about 14 handles below where we were this time a week ago. Given the movements we've seen out there, you're right. You think that's not really merited, but you're right. The market dictates, sir, and right now they're not wanting themselves any of it. And as a result, VVIX taking a little bit of a break today as well. If you think that's overdone, listeners, then there are opportunities for you out there as well. Let's keep on rolling. Some of those opportunities may lie in the aforementioned VIX options. Let's see what's cooking out there in VIX options land this week. VIX options ADV coming into showtime today, right around 586,000 contracts, up nearly 10K or so from a week ago. So getting a little bit of love out there. Things are slightly a little bit more robust, but not huge numbers. And today, given the amount we're seeing, how much we're moving in the marketplace, not a huge volume result today either for VIX options. Only about less than 250,000, 237,000 contracts on the tape. So we're well below half of ADV, even though the markets are moving nearly 4%. So yeah, we're in weird times here, listeners. So let's see what people have been trading out there in VIX land. What are the hot VIX strikes, the big size open positions in VIX land. And Mark, this is the first time in a while that I've seen this where the top 10 in VIX options, sir, all calls. You got to go all the way down to number 12 to find the first size open put on the list. Does that surprise you given what we're seeing out here these days, sir?
I mean, I've seen a lot of put activity trading, but, I think there's no shock. There's no shock options out there. We've got stock options, VIX. A lot of times what you see are shock options, and that stuff really isn't trading. Biggest trades I've been seeing have been the 19 puts have been being bought a lot, and we saw some Jan 30 calls trade. But yeah, I'm kind of shocked by the low overall open interest and low ADV given how much the market's been moving around.
Yeah, you mentioned the puts, and we'll get to those in a second. Those are kind of trading it up today, the Jan 19 puts. But outside of that, there ain't a lot of put love out here. Let's go to the top 10. Actually, let's go to number 14. That's where you got to find the first put on the list. It's the Jan 16 put with 127. Going outside the top 10 really quickly, listeners. And then 27,000. And then number 13 are the Jan 18 puts with 127,000 as well, so pretty much tied. Then number 12, the Jan 15 puts with 132,000. And then that's it. That's it for the puts. You got number 11, 837 halves with 133,000. Then we get into our actual top 10 here, starting with the Feb 35s, 135,000 of those bad boys open, followed by number 9, the Jan 24s, 135,000 of those as well, so pretty much neck and neck there. Number 8, the May 37 halves, getting a little bit of a theme here, listeners, 138,000 of those bad boys, jumping up a little bit. Now we're getting into some interesting strike selection here. The APE 70s. I need to dig in, see when those... We talked about some of that before, I think, on the show, how usually February is a time when you start seeing, for whatever reason, there's a high propensity to love some 70 and above strikes in the February timeframe. I don't know why that is. Now we're seeing it earlier. We saw it in December, now we're seeing it in January. I need to go dig in some more, see exactly when all those are open. But APE 70s, 153,000 of those bad boys. Think about that in your mind for a second, listeners, what it would take to make those 70s pay off. And granted, it doesn't have to go all the way to 70. I realize that, but still, those will pop given any sort of substantial move in VIX. But still, APE 70s, just think about what line that draws in your imagination there as we keep rolling. Number 6, the APE 45s, 160,000. Number 5, the Feb 40s. $1.61 open there. Again, we're getting into the top 5. Number 4, the Jan 32 halves with 166,000. Number 3, the Jan 35s with 200,000 even. Number 2, the Jan 30s. The 30s always have to be in there somewhere. The 30s this time in Jan, taking the number 2 spot, 244,000. And rounding out the top 10, the biggest open position in VIX land right now, Feb 37 halves. With 331,000, roughly halfway to the APE 70s on those. I don't know, Mr. Meatball, what would it take for you to want to put on some APE 70s in the Karman line fund, sir?
I think that's part of a roll, I think those are short against something else. I don't remember exactly, but I seem to recall those trading as like part of a 1x3 or part of like a Feb 60 APE 70 type spread. I think that there was that was the trade that kind of created that open interest. I do not think that was just a straight April call buy.
So it would be fun if it was, wouldn't it?
That would be hilarious if that was that person would be disappointed with that purchase.
Yes. I think that you can't go out on a limb all the time and make outlandish predictions, but I think we could go out on a limb on that one and say that guy probably not going to be too happy. His broker might be like, "Are you sure? You sure you don't want to look 10, 20, maybe 30 strikes lower than where you're looking right now?" Speaking of strikes, let's see which strikes were lighting it up. The aforementioned puts, the Jan 19 puts were leading the dance today. Coming into showtime, they had over 31,000 on the tape. 3 blocks. One of these blocks went up late, so it's not shown in the overall value. So maybe this third block is a bit of a weird print. But I'm showing here about 17,000 of them going up for 20 cents. These are lifting the offer pretty much. And then 15,000 again going up a little bit later for 16 cents. So those are on the bid, so kind of working all over the place on these bad boys. And then another 15,000 or so going up for 17.5 cents. So that's marked late, which is why I kind of think that one might be a little bit dubious, because going in, it said the total volume was only 31,000. So we'll see if that latter 15,000, in which case it'd be about 45,000 going up on this strike today. So that's the hot option du jour. Today, listeners, not a surprise, we're seeing a bit of a meltdown in vol, so we're seeing a little bit of some downside put action. Maybe that will get these puts bumped back up. The 19s aren't even in the top 15 So they need some love, a lot of love, to really get them bumped up there into the top 10 for next week. We'll see if today's action can do it. Outside of that, we're seeing the Jan 29s, not all puts, listeners. Jan 29s going up today 20,000 times. That single prints, that's the largest print in VIX today. 36 cents for those, so a penny off the bid there as well. So this kind of is the theme we were talking about before. There's been a lot of, or shall I say, no real reluctance out there in the marketplace to kind of harvest some upside call premium in VIX land, and that seems to be the case. Looks like, at least again today. This could be closing, obviously, but this is not an opening print. A lot of size on the 29 strike out there. Let's see, do we have the 29s in the top 10s off the top hand? No, we do not, so we can't look at the OI exactly, but it is clearly not opening, so it could indeed be someone getting the heck out of Dodge there as well. Jan 40 is also a big print today with about 15,000 of those bad boys going up for a whopping 7 cents. That's kind of mid-market. That could be someone getting the heck out of Dodge there as well. They were a nickel at a dime, so could be someone saying, hey, I still see a bid for these. Let's take it and get the heck out of Dodge. Those are not opening either. Also, the Jan 29, it's a little bit more, shall we say, reasonable strike selection comparatively, going up 8,000 times for 36 cents. So they're kind of all over the place. Those are also on the actually goes along with what I mentioned before with the other ones there. So that looks like 28,000 total of those have printed today. Excuse me. Let's go on to, let's see, our other friend here. Good old VXX coming in. That's kind of been, we talked about VIX trades and trends for 2018. But if there was a trend, I'd say overwhelmingly for the show and for the audience, what you guys write in on all the time, it is fading VXX aggressively, I would say, is your trade du jour out there. And unfortunately, as we mentioned on the show last week, 2018, the outlier of outlier years when it comes to VXX, one of the only years it's ever been up, I think the only year it's ever been up in its over, I think 12 years now, 10 to 12 year history, and up for size. So unfortunately, a lot of you not liking that, but you like today's number a little bit better. As we're coming into showtime, VXX off 3 handles and change. We'll do a percent here for fun. Why not? 7.5% roughly. And 44 handle. That's about 6 points below where we were. We were at exactly 50 at showtime last week. And if we're looking here for top positions in VXX land, are those 10 puts still there? I hate to break it to you, Mr. Meat, but I don't think those 10 puts are probably going to pay off. But you got paid to put them on, so you're not
right.
Too sad on those bad boys.
Yeah, they cost me next to nothing.
You never know. We might have a meltdown. We might have the meltdown of all meltdowns. You might hear tomorrow. In terms of vol, we could hear trade war over tomorrow, and bam, VXX at 8. What do you think?
You would need VX. You would need VIX to go to like 8, and the VIX futures to go from 22 to 9 for the next, and stay there for the next week, and maybe you could get there.
That might be a fun question of the week. One of these, maybe next week, is what would it take for these 10 puts to materialize in any sort of accretive effect? I'm not talking catch a bid for 2 cents. I'm talking get meaty. That'd be an interesting thought question. Yeah, it would have to be. We have to have a whole lot of nothing going on for the next, and every other issue be resolved. Government shutdown ends right now. Trade war ends. Everyone's happy right now. And we have quiet, tranquil waters, aggressively quiet, if there is such a thing, for the next 3 or so weeks. So then those may indeed come to pay off. Number 2, the Jan 15 puts. Number 3, the Jan 5 puts. Number 4, the much more reasonable Jan 33 puts. 65,000 open there. Those have a shot of coming into play here. Again, that's only about 11 handles off of where we are right now. Jan 50 calls. You got to go all the way down to number 7 to find the first size call position. 49,000 of those bad boys. Hopefully, if you had them, you unwound them. But if there's 50,000 coming into showtime today, I guess the answer to that is no. Maybe you're thinking there's more upside to. The crazier things have happened. It doesn't, because today's rally doesn't mean it's all over. With trade war is not done, the government isn't open yet. So I could see why you may want to keep some on. Hopefully, it took some off when these bad boys were nice and rich, because we all know VXX and upside tends to be a somewhat ephemeral thing, so take it while you can get it. The non-standard VXX, so aka VXX2/B, whatever the hell they're going to call it, also open with about 40,000 there. So the 50 strike collectively across the board for both of those has about 90,000. If you add those two up, that's actually the number 2 position in overall VXX. I'm going to add the two together right now. So that makes it number 2 above the Jan 15 put. So there is some call up. Again, you guys maybe want to consider catching a bid or two on some of those bad boys before. Not all of them. You don't have to get rid of all of them, but hopefully you take some off the table because, again, VXX at 50, we all know usually how long that lasts. But we're in aberrant time, so you never know what's going to happen. Mr. Meatball, anything else out there catching your eye in VXX land this week, sir?
Yeah, it's had some. What was interesting, and VXX kind of, I think, if you really watch it, what was interesting was that yesterday, as the market was kind of falling apart, it was really showing that it could not get a bid to it, and has really been kind of in soft all week. And I'm not a big moving average guy, but the 50-day moving average is flat now. It's not going up anymore, and in fact, it is actually ticking down, which is pretty rare.
Are we headed for a death cross, sir? Is that what's coming?
I think we're heading for what's an 8-year death cross.
Get out, Rao. Get out the death cross. That has to be my favorite bits of terminology in the technical landscape because it is so absurd. The death cross. It's like we want someone to really think this is relevant. We're going to call it a death cross. Oh yes, the wonderful world of technical analysis. We can keep going on that. Let's go on to some other vol areas here in the space. Mark, the big mover, we talk a lot of index vol. Obviously, that's a big deal. But the big driver of vol this week, we talked about the government shutdown, talked about all the macro things like, of course, the trade war and the Fed. But micro was very much in play this week as well. Apple coming out of the gate hot, saying, you know what, we're going to do something we haven't done maybe forever, at least 12 years or so, which is revised to the downside. I remember back in the go-go.com boom #1 era when I was out in Intel, and Intel was the darling of the world, and they did this. They came in mid-cycle and warned to the downside, and oh, what a crushing that was. We came in the next day, and there were literal crowds gathered around our pit just to watch the madness unfold, and tons of people, because the rest of the day was kind of slow, so people left other crowds just to come watch us because they knew we were down like 25%. This was going to be one of the craziest days they had seen, and it turned out it was a pretty crazy day and a fun one as well. So I'd imagine they're having some action out there in Apple, but of course Apple warning on iPhone demand and sales in China. Stock getting, I think the technical term is, what did you say before? It was a poopy diaper, something like that. But today, not so much. Today, reversing a lot of that sell. It was the biggest one-day sell-off, I believe, in Apple's history as well. Today, reversing a lot of that, up 6 handles or about 4.5%. Still shy of that magic 150 level that I know a lot of you sold the puts on, at least in our magical poll here. But those puts looking a little bit better here today. Mr. Meatball, I got to imagine a lot of the crazies in the pitch chat. We're slinging some Apple vol this week. What was your take on all this madness, and what were your crazies up to this week?
Yeah, I mean, you got to wonder whether yesterday was maybe some sort of floor, because Apple was completely overdone, and the idea that was going to be into the 130s was kind of laughable. That's why I finally got excited about put selling yesterday, as opposed to the way it was before. So, and the fact that we never really got a pop in VIX APL, the VIX of Apple, is now kind of below where it was the day before all this took place. So, I don't see a lot of reason to be overly bullish or bearish.
So you're not buying. Did you end up selling that put spread? What was it? The 130 put spread you want in July? I think it was 130, 120, something like that.
I wrote that up for thestreet.com. I wrote selling the 145s in July. I did not do it myself.
Oh, it was 145, 130, right? Something like, or just straight up selling the 145s.
So I believe on the show we talked about selling the 140s. I ended up for the street writing up selling the 145s. But that was I'm going to be happy with that sale. That's my gut.
Yeah, for the street, you gotta go straight up short puts. You can't go put spreads. They're not as sexy. They want to harvest all that premium over there.
Correct.
On the street, you can't say, "I got to buy this other thing for risk management." They're like, "Get the heck out of Dodge here."
What is this thing? Risk management.
Risk management? Apple can't go to zero.
How dare?
What's their liquidation price with all their cash? Somewhere around probably 70. So you got a nice. At least with Apple, you got a nicer floor, I think, of protection than you do with some other names.
Right.
They could just decide we're going to buy it all back, and you're good to go. We asked you, by the way, our poll. Out there right now, hot and heavy. We did that poll a couple of weeks ago. This is a follow-up to that. We asked at the time when Apple broke through 175 to the downside, hey, We're 150 puts are around $2. Jan 200 calls also around $2. What do you want to do? Buy or sell them? Overwhelmingly, you guys come in and said you want to sell those Jan 150 puts for around $2. Guess what? Those are kind of in the money now. So we asked you, what do you want to do now? If in that hypothetical scenario where you sold the puts, what do you want to do? You want to take the stock, so you'll happily buy the stock around 148, which is pretty much where it is right now. Do you want to wheel out with the old covered call, so sell in at the money or maybe slightly out of the money covered call? Very near term, and then kind of get the stock taken away. That way, get a little appreciation in the meantime. Do you want to roll that put down, or do you want to close the position? Mr. Meatball, what do you think here with another day or so under our belt? What do you think our audience is picking?
I think they're still picking. I think they're still stuck in that put position, but I think that that'd be my guess.
Yeah, they're more evenly split than they were yesterday. Yeah, yesterday, most of them were happy to take the stock around 148. Today, that's still winning, but winning by less, about 32%, so a little bit less than a third, saying they're happy to buy Apple at around 148, which, again, if that's the case, you can go do that in the market right now. You're a happy camper. Or 26%, so they want to roll that put down, which I think is interesting. So still maybe some issues with Apple going a little bit further there, or they think they can at least harvest a little bit more premium to the downside, but they're willing to take that hit in the near term, which is kind of interesting. 25%, so about even money there, saying they want to wheel out with the old covered call, so they don't want to keep that stock. They want to get rid of it, which is also interesting in and of itself. And 17% saying they want to close and get the heck out of Dodge. That one's going into next week, listeners, so you got a little bit of time at options over there to make your voices heard. Really quickly, we'll look at this little quick look. Mr. Meatball, I'll give you a little quick guessing game because it's fun. If you had to guess right now, Apple's at what? What did I say it was? 148. What do you think is the largest open position in Apple options right now, sir?
The largest open position in Apple options, like the 250 calls, something crazy like that in the Jan 250s?
Not a bad guess. They're actually number 4. With 50,000 open of those. You think the zealots would be out there, right? Plus, it wasn't that long ago. It was threatening those levels. It's actually the Jan 180s. It's all Jan calls. The Jan 180s, 76,000. Number 2, the Jan 170s, 51,000. Number 3, the Jan 200s, 51,000 as well, so kind of a tie there. Number 4, your favorite, the Jan 250s, 50,000. You got to go down number 5 to find the first put, the Jan par put, Mr. Meatball, 47,000 of those open, which is interesting. Perhaps a legacy position from bygone days there. Interesting stuff out there in Apple. Speaking of interesting stuff, we got to get rolling into some other stuff. I know we might have to do a little bit shorter show for you today here, listeners. So, Mark, I know you didn't get a chance to play in our crystal ball, and I know a lot of you did over this past week. So why don't we go to that, kind of a combo vol voicemail crystal ball segment, and see what you guys have in store and what the Meatball has in store for our picks for the VIX at the end of 2019.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the Volatility Views Crystal Ball, I should say, which is, of course, usually we do vol voicemail. We're going to combine it today. Like I said, we got to do a little bit shorter show today, but I also want to make sure we get all the votes in. And we had a fun time. At the end of the year, we looked back. We also looked ahead on our last show to where we think VIX Cash will be at the close of this year. It's always a crazy thing. Guessing a week ahead in VIX is a crazy thing. Guessing a year ahead, that way only madness lies. Yet we ventured there. We went there. And I'm pleased to see a lot of you bravely ventured along with us. Maybe the lure of fabulous prizes helped you do that. So we did a couple of things. We actually had a listener chime in. Who was it? Oh, Pat Hennessy chime in saying he liked the VIX poll, but he wanted to propose a secondary question, which was, what will the average of VIX be based on daily closes? That was his way for 2019. He thought that'd be a better gauge for the entire year, which I do agree. But part of the challenge of this VIX crystal ball for the end of the year is, of course, trying to weigh in your mind whatever macro trends will be going on at the end of the year with the normal seasonality of VIX, which is usually to the downside of that time of year. Of course, last year we saw not so much the case. So macro can trump all things. And so that's kind of what you're doing there at the end of the year. But that's not a bad idea. So we kind of guessed both. We guessed where we think VIX will close at the end of the year. Me and the Rock Lobster actually fairly close on that one. I was surprised. And then, but Rock Lobster feeling, I won't muddy the waters because I'll get, like Mr. Meatball, you've had a week now to think of such thing. A week longer than both the Rock Lobster and I had. So I will give you the opportunity to guess two things. First, where do you think VIX Cash will close at 2019? And secondarily, we have, what do you think the average for VIX will be for 2019, sir?
All right. I'm going to say that, what was the average for 2018? Well, do you know that off the top of your head?
I don't have that off the top of my head. That's actually a good question. I don't have it off the top of my head.
I want to say, despite everything, it was probably less than 17, I'll bet. I'm going to say that the average VIX price will end up being 14.05, and that the closing December VIX price, we're going to get the opposite of what we're used to, and we're going to get a closing VIX price that gives us, let's say 12.04.
12.04. So you're buying into the seasonality, sir. I like it. I'm not averse to that at all. I'm looking here to see if I could find. I don't have any. This is where Mr. Rhodes would come in handy with his deep bench of historical data because I don't have it readily available to me. That's a good. See, why would you want to arm yourself with data before making a prognostication, sir? That's for chumps. That's for cowards.
Yeah, how dare I
we boldly go forward in spite of the lack of data. How dare I want to make an
educated guess?
No, that's not what this is about. This is about pure on-the-fly analysis. Like back when you're in the pit, you had your sheets, you go off them, you go to crazy, you go to town. Maybe you had a handheld if you were fancy. And the rest was all madness. And let's see. So 12.04 for the close, and your average of 14.05. Am I correct there?
Yes.
Okay. So your cohort there, the Rock Lobster, he said the close is going to be 16.01. His average, I thought his average was fairly low. He was 14.99. I was feeling a little bit higher on the close, right around 17. So I thought we'll obviously come off the highs of vol, but I think there might be enough turbulent waters to keep us somewhat elevated. And then an average for the year around that level. I'm feeling in the 17 range for that too, about 17.60. And then we got, all over the place for the audience. We did a poll as well as the specific picks. And the poll, we gave them 4 choices, Mark. We gave them kind of ranges, which I think your Rock Lobster has since copied into his VIX zones, but we'll leave that for the lawyers to settle out there. So I gave him the 4 choices, kind of the low range, like 8 to about 12, and then the normal, quote-unquote, range of about 12 to 17. Forget about long-term averages of 20. We talked about that a million times. Elevated, quote-unquote, which is the 17 to 23 range, and then the very elevated, which is over 23 range. Mr. Meatball, with 37% of the vote, what do you think won that poll, sir?
I'm going to say that the option 2 did. That's
normal, the normal range.
Normal range. Although if our audience is I'm going to say normal range, but I think they're going to be wrong. I think it's going to be lower than normal.
Remember, there's a bit of a recency bias out there.
I know.
And so
they may think it's going to be insane, right?
Yeah, that seems to be coloring the waters right now. 37% saying very elevated, over 23.
Oh, God.
Then 32%.
In 2008, the average VIX price was not over 30, folks. No. Remember that.
I know. And yet 32%, that's why I like doing these questions. They're kind of fun, especially this time of year. Elevated 32% coming in number 2 with 17 to 23%. I'm in there. I'm in the low end of that, but I'm in that range. And then I'm kind of on the cusp of both ranges, the normal, elevated. Then 29% for normal. So we had a nice, fairly even split, Mark. Only 2% going for the 8 to 12 range. No one feeling that super, what we term the low range there. But we also asked you guys, if you want to get the serious prizes, then you got to do your own legwork, and you got to actually come up with your own prognosticator. We had a bunch. This is just a representative sampling. I will have to go through and make sure we compile all of them, because you also sent them not just via the usual platforms of the Twitters and the stock twits, but also via email and our website feedback form and a bunch of other ways. So we have to go out and get all of them. But here's a representative sampling of what our audience is feeling right now. They said, let's see, what do we got? Acats in the chat I think it says last week. He's saying 31.5. He thinks it's going to close there. I think we got one more day down to round out 2018, and then again I had just started trading vol and was holding XIV on Volpocalypse. So what do I know? Oh, I feel your pain, sir. A lot of people were in a similar boat. Neil Wales, he says 13. What does he say? 1333. He also says he's still waiting on his book from the last competition, sir. No rush, but
yeah,
I think he's the international guy. I think who got it spot on.
I'm mailing those today.
Okay, there you go. So
at least that's the plan. Either today or tomorrow.
You can stop hitting me up. Hit up at Option Pit for your books, all your prize winners.
Exactly.
It is not us. Trust us. It's the meatball. He's busy eating meatballs. What do you want me to say? So he's the guy who got it spot on with our 2-week one. So maybe pay attention to his. He's feeling the low with yours. 13.3. P. Biggers. I just like that handle. 25.5. He's saying for the close. Charles Fisher, 26.15. We're all over the place, which I like. Contango King. He's got Contango in his handle, so you think maybe he pays attention to this stuff. 12.14. He's feeling the downside with you guys. Mailman Dan, he might win for the handle of the week. He says the close, he went the extra mile. He says the close of the SPY is going to be 257.5, and then VIX will be at 22.5. So he gets extra awards for specificity. Brad Huff, 27.25. A lot of you feeling some richness to the vol here. Ophir Gottlieb, he sent in 1%. Then he amended it to 1.01%. I think he was joking. Then he went on to his. I think he's doing his Price is Right thing. And I think he sent in his real pick of 26.42. So Ophir's
that's what he thinks.
Ophir's
the
feeling
average VIX price.
No, that's his close. That's the close
for the year.
Close for the year. He picked 26.5.
Yeah, ask him how that's worked out for him traditionally.
A lot of friends of the show channel. Here's your buddy Steve Place. I believe he was at your event.
Yeah, I love that
earlier.
guy.
He's tweeted in, it's going to be Armageddon, end of the world, plagues and locusts, markets close, and 0% vol. Checkmate. I don't know if that's going to happen. Then he wants to know, like Ophir, is this like the Price is Right, where if you guess 1, then everyone wins? So then he came in with a bet of 6. I don't know how serious that one is either. We got vol trading. He says his 2019 17.5 is his close, so he's kind of feeling what I'm feeling, with a 2019 average of 14.5. A very reasonable prognostication. Pat Hennessy, the guy who suggested the average, he says his guess for the close of the year is 19.25. I don't know if that's his average guess or I think that's his close of the year guess. I'll have to check. Zapod, I like that one too. He says I wasn't sure what they meant by this, but I like it anyway. We have to drop in Q1 from here with shenanigans and earnings and Mueller, all that stuff. I don't think we spend a lot of time below 16, so his bet for the close is 21. That might be his average bet, 21.35, as some spikes way on the average. Wow, that's another aggressive average. People are feeling the vol here, Mr. Meatball. I don't know. This guy says, just close your eyes and BTFD. How's that? Hopefully, that hasn't been working out too well lately. Hopefully, you've been averaging down, and it's a little bit less painful now. Andrew Nightingale, CFA, says 32. Wow. Feeling the vol. Jay Soloff, first half of 2019, average 28. Second half, 16. Okay, I can maybe see what you're putting down there. But I think the lower prints outweigh the higher prints, so we end up with an average of 18.5. He must be over British. I like that. Do not question the rigorous maths I have used to come up with that number. It's proprietary and may involve an abacus and rye toast. I like this. This guy wins just for sheer snark. I'm going to give him an extra award here. Maths, I must be British. Oh, your buddy here, Dave Lincoln, Mr. Famous Dave of short vol infamy. He says his bet for the close is 16.90. He's kind of feeling the same thing I am, with 17.90 for the average. Let's see, we got time for a few more here. Trading Vol says 24.3 with a low of 17.6 and a high of 63.2. I love the specificity you guys get into. So we didn't ask for that, but you'll get if that stuff comes to pass and you win, you'll get bonus points. So yeah, specificity is great. This other guy, Barton, says my guess is 25% between 2007 and 2008 levels. And he throws some all sorts of equations in here and says I think his closing number is 21.33. I would have guessed halfway between 2007 and 2008. We did not have the systematic, short vol crowd. I'm not sure if that's his guess for average or for close. I mean, you might be going for average, which would be also rock'em sock'em year. Your buddy Matt Thompson, a.k.a. Mr. Mullet and Tulum, his guess is his average. His guess for the close is 1803. And then someone else chimed in, said that feels, Ahmed Sharif said that feels 3 cents too high to him, so he's at 18, obviously. And then he also says his 2019 average guess is 24.88. So he's Mr. Meatball. He's feeling the vol there as well.
Yes, he is.
Are you down the office from those guys? You're gonna knock on the door and be like, what are you feeling for next year? That's surprising. He's actually been of our friend of the show pickers. He's been one of the more spot on. So if you're feeling some vol next year, listeners, maybe you take a little consolation. And let's just do a few more here. Bill Luby, Mr. Vixen Moore, he says 1583 for the close of next year. Brad Huff 27 and a quarter. Mr. Contango Trader, he also sent in a pick too. He said 32 and a half for the end of the year. Wow. And so yeah, there's a lot more here. We're gonna get them all compiled. You got till the end of the day today, listeners. So if you haven't get them in, a lot of you have. Get them in. I guess we should pick for next week really quickly too, Mr. Meatball, just so we can be in keeping with our thematic business, and then we'll call it for this week. I'll be charitable. Yeah, we're on last week. I'll let you choose if you want to go first. Or you want me to go first? For picking for next week, sir. Looks like we have connection issues. So you know what? We're going to table the picks because his connection got all sorts of wonky there towards the end. Plus, we have a festival of picks. But tell you what, I'll give you guys, we'll go a couple more minutes here. Let's see if we can get a couple, we got some good questions here. Let's see. D. Dell saying, would you ever have imagined VXX at 50 at the end of the year? You know, well, if past is prologue, and it isn't always, but in this case, it usually is, especially for VXX, 99.9% of the time, it ends the year down and down markedly. And yet this year it ends up, and it ends up aggressively. So would I have picked VXX at 50 at the end? No. If I did, I would have probably gotten some very cheap calls on the upside along the way. So that one kind of came as a surprise to me, as it did to a lot of people out there. Not that we had the return of volatility, but that we saw it kind of get to that market level. And a lot of that is, exacerbated by a lot of macro factors outside of the control of most of the people out there. So interesting stuff out there. Ned just saying 30 VIX, WTF. Yeah, that was from, I think, right before last week's show. Yeah, I was feeling, when we were at there, obviously we were a little bit lower than that right now. Let's see here. We've got JVLC. What's the vol crew predicting for 2019? We just gave you a bunch of those predictions, so hopefully that has sated you. I'm just wrapping up here. Mr. Meatball, are you back there, sir? Are you back?
I am back.
All right. So I thought we'd give you a chance if you want to do a quick pick for next week as well. Do you want to? I'll let you choose if you want to go first or if you want me to go first.
You can go first.
I thought you'd be charitable in that sense. I
like that.
I'm so in the 2019 zone. I need to end of 20. I need to dial back my analysis machine all the way. Next week now seems so close and so rapid. As we're closing out the show here, right around 22.30 in VIX Cash here, listeners. So let's see. Are we going to get more crazy tweets, more exacerbation, maybe another earnings warning or two? Or are we going to feel it settling out around here? I've been fading for a while. I've been dialing back on my fading, but that obviously has not been working. Now that I'm second guessing that, though, it's probably the week you want to fade because it'll come in hard and aggressive. So I'm going to keep my trend, but dial it back a little bit. I'm going to say roughly 3 handles lower than where we are right now. 19 and a quarter. Mr. Meatball, same question for you, sir.
Your lips to God's ears. That would fit me perfectly.
Yeah, there wouldn't be worse things. Yes.
I mean, I'm really kind of fascinated in kind of what the next week in particular looks like. I think there's just an amazing amount of potential for volatility to go right back up or completely take a dump. And I think that you're either going to be really wrong or not right enough. Does that make sense?
Yeah, I could see it next week being where I am. I could see it 28 again. You know,
I could see it 30, or I could see it 16.
Yeah, it's got there's credible arguments to be made for both, which is why this is the challenging week. So you're buying yourself some time, sir. What do you got for us?
You know, I'm going to guess 17.5.
17.5 for the meatball. All right, 17.5. So you're still feeling the fade. I like it. Can't get angry with that. And listeners, you can't get angry with us. We gave you pretty much a full show here as we wrap up a little bit early. But don't worry, if you want more, you got more vol in you, more needs for more discussion of things like volatility. Stay tuned. I'll be back in about 35 minutes to welcome in our newest addition to the Options Insider Radio Network. Yes, the Crypto Rundown, launching in about 35 minutes or so. You can get it live here or get it after the fact on demand, wherever your finer podcasts are pervading. I'm going to talk about crypto volatility, what the year was like. Obviously, a lot of downside, a lot of red, how that plays out. Also talking about what's going on the options side. Yes, there is a fairly active OTC options market, even if you don't see the listed stuff. So we're going to talk about that. It's going to be kind of fun. All sorts of stuff coming up. So stay tuned for that. If you're curious, you're intrigued, maybe you just want to learn more about that space, join us in about half an hour or wherever your finer podcasts are pervaded to talk about that. But before we go, Mr. Meatball, what is cooking? You got a big event coming up, right? In Option Pit Land next week?
Yeah, when this Thursday at the CBOE, at CBOE Global Markets World Headquarters. No longer the CBOE.
That's better, sir. There's been a lot on branding. You got to acknowledge that.
To those those at CBOE. Myself, I will be presenting with Catherine Clay of Liveball and Andrew T. Giovinazzi, Maine's Best Italian. And we're going to be going through how to use volatility analytics and showing some cool spreadsheet stuff that we've been working on. After we're done, there are drinks. So you're definitely going to want to be there.
I may have to swing by for no other reason than just to see Maine's best and perhaps only Italian in person. You don't get to see that very often. So if they want to do that, Mr. Meatball, can they go to optionpit.com and register, or should they hit you up on Twitter?
Just either DM me on Twitter or email me, mark@optionpit.com.
There you go. Email them, DM on Twitter, email them, mark@optionpit.com. It's a cool event. Like I said, Andrew doesn't come to town, doesn't come out of the sticks very often. So if you want to meet him in person and give him a hard time about his vol predictions, or maybe tease him about copying my VIX zones, have at it. Come in person next Tuesday, over there at CBOE Global Markets to keep with the branding. Don't worry, got a lot of great shows in store for you coming in 2019. More great guests, all sorts of fun stuff. We like to kick it off with some fun prognostications. I think you guys clearly are playing along. You like that stuff, so we'll get more of that for you as well. Otherwise, we'll see you back here next week. Well, about 35 minutes for the Crypto Rundown, but after that, we'll see you back next week for more Volatility Views.
Volatility Views is brought to you by CBOE. CBOE is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We are the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit CBOE.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.